Pitch is a pretty tough act to follow, and I'm talking about something that I think most of you may find a bit boring, but I'll give it a go. I said I'll talk about IPOs, and ultimately that theme is how would the public equity market finance your venture? I mean, what is the end game? And this will not be a sort of how-to guide to IPOs, but hopefully you'll get a few pointers as to what you should think about early on if you are preparing for an IPO. It might come as a surprise, but you actually do need a relatively solid reason for an IPO. You just wouldn't do it for the fun. And we have on the left-hand side here the sort of 4 basic reasons for why we think you might want to consider doing an IPO. And it's actually quite important to understand what the reason is, what the primary driver is, because I mean, positioning these to the investors, i.e. the buyers at the IPO, will all be very different. It can be that you want to cash in as an owner. You simply want to get the cash, do a partial or full exit. You may be of the opinion that your industry, your segment, your sub-segment is in need of consolidation, and you actually want to create acquisition currency. You may want to get cash proceeds for growth, be that for investments or acquisitions, or ultimately, and this is not a totally insignificant reason, it's totally valid, you may actually want to create a powerful tool for attracting and retaining top talent. And if you're really taking your venture global, I mean, this is something you really might want to consider because it is a powerful tool. You shouldn't do an IPO if you're shy about yourself or your company, because it's somewhat comparable to having an autopsy done while you're still alive. You will be subject to quarterly reporting, which is not great fun, and almost by definition, as a result of an IPO, you will have a share price. And the problem with share prices is that while they should go up all the time, every once in a while they come down, and that will have very unfortunate knock-on effects that are beyond your control. Also, I mean, you should not forget that even if you only do a minority IPO, it's not going to be your company anymore. There will be sort of corporate governance rules and practices that will impact the way you can develop the company and sort of make decisions. And the same also applies that you should not really be thinking about doing an IPO if your company or your industry subsector is going through a step change, because the public market is inherently conservative. They most likely punish you a bit more for the downside than provide you the potential upside of that step change. And one last point, you should probably not be thinking about an IPO if you think that the ultimate exit for your venture is through M&A, because doing a private M&A deal as an end game for an exit is so much easier than in the public space. One of the key decisions you may want to sort of consider early on is where do you actually list the company? And I'll spend quite a bit of time talking about that, because that is the one decision you will have to make. It will be binary. And why it is important is that you only get one shot of selecting which are the investors you want to follow your company, give you the long-term support. And experience has shown that once you actually do the IPO, recycling the investor base is extremely difficult. It usually does not happen. And actually the investor base does drive the valuation. It does drive the sort of fan club you get. I mean, what is the domicile of the investors that follow you? And it will also drive the research coverage you get from equity research analysts. The case I would like to make, and I have nothing against NASDAQ, and I'm not on commission from the Helsinki Stock Exchange, but being a Finn, I mean, the case I'm trying to make and sort of underpin is that for most companies, a domestic listing is by far the best option. There's a number of reasons for that. For larger companies, a NASDAQ or US IPO will be attractive, but I mean, it does carry several challenges and maybe even pitfalls that we'll talk about. Just putting this in context, I mean, if you just think about, people talk about global capital markets, and yes, they are increasingly global, but if you really look at where investors come from in various stock exchanges, and here I just focus on NASDAQ and Helsinki, you can see that in NASDAQ, it is a US stock exchange for US investors. And if you really want to succeed there, you will have to sell your story to the US investors and actually outsell the domestic rivals. It can be done, but it's not easy. When you look at the Finnish market, you can actually make 2 observations here. One is that Finnish companies surprisingly well have attracted the attention of international investors. So if you do a Finnish IPO or domestic IPO, it doesn't really mean that the international investors would not follow your stock. There's one, I mean, what some people might think impediment in Helsinki, which is that there really haven't been any IPOs of any size for the last sort of couple of years. We actually do think that that is a positive, because the institutional investors really want to bring new companies to the market, and there would be investor demand. So we actually do think that the first company that dares to reopen, or sort of is brave enough to reopen the Finnish IPO market, will get an awful lot of free publicity, awful lot of good momentum and support, totally free of charge. The one thing you cannot get away from is that if you really are a larger company, if you really want to be at the cutting edge of a certain segment, NASDAQ is the stock exchange with the highest, sort of biggest universe of tech companies, the biggest universe of tech research analysts and tech investors who actually make their daily living out of investing or going in and out tech stories. That you cannot avoid. What you need to balance that against as a Nordic company or sort of from wherever you come with your home country is what's the cost of actually achieving and maintaining a listing in a foreign exchange, in particular NASDAQ, and what is the likelihood that you really manage to get the long-term support of the investors. And I have a few case studies on that. And also one thing, and again, on no commission from Helsinki Stock Exchange, but Helsinki is not a bad exchange. I mean, there's a lot of tech companies here. There's actually quite a good tradition of people, both investors and equity research analysts, who understand tech companies, who would be prepared to invest the time in looking at the cases. Now, how does this work in practice? Just an example, we did the IPO of Transmode in Sweden this spring. It was a $90 million IPO. Sold about 1/3 of the company. There are a couple of sort of very good findings which I thought would be apt here. One is that demand, as we expected, came from Sweden predominantly. So say 60% from Sweden, domestic demand as we expected. The second thing which is quite interesting, and I hope you can read the slides, it's not really in focus, but the Nordic crossover was about 17%. So Norway, Denmark, Finland, in that IPO were about 17%. And we think that if you do a Finnish IPO, you would get the similar type of crossover from other Nordic countries. And then institutional investors, sort of international investors outside the Nordic region took the rest. So investor base, that worked, demand was there. What happened with the valuation is the valuation arbitrage. But there was one key German peer, Adva, which was at the time of the IPO trading at 13 times PE. We sold or priced Transmode IPO at 18 times PE, so comfortably pricing through that one key peer. The one thing which was valid then, is valid still in Sweden, is valid in my opinion in Finland, is that the sort of lower group of people, sort of companies which are not directly comparable, they have a very different business model, different segments, but they're still high growth companies which have taught the investors to actually pay the high PEs or the high valuations high growth companies will need. So that actually provided a bit of an undercurrent, helping us price the growth company at the level which was acceptable. Now, the second thing is, okay, that was at the IPO. Since the IPO, and that happened in May this year, the company has outperformed the OMX 30 in Stockholm by about 30%. So we clearly managed to build the long-term demand, the investor support. One question that you may have on your mind is how many research analysts do we need for a successful IPO? What does it take? The company is currently covered by 4 research houses, I mean ourselves, and 3 Swedish houses. That is actually plenty for a company of this size. That is plenty for a venture. We did the IPO with only 3 research analysts. So that is not an impediment. And as I said, in the Nordic region, including in Finland, you do find these analysts. There's one key message here which is not on the slide, which is one of the key points I would like you to take away from this, is that Transmode started seeing investors, institutional investors, 2 years ahead of the IPO. They were well prepared, but they presented their case, and they said, this is what we're going to do. They came back and said, this is what we have done. And they actually built up the whole momentum, whole demand, in particular with the Swedish investors, way ahead of the IPO, so that when the IPO happened, it almost felt like a secondary issue. And that is something you should really consider. And institutional investors really do like that. They appreciate the chance to meet companies early on, assuming you're well prepared. I mean, the thing they hate most is seeing people or companies when they come through town on an IPO roadshow. There's very little time to understand what has happened, what these guys have done, how consistent are they, how reliable are they in their business. I mentioned the valuation arbitrage, and this is just sort of one subset of tech spaces. It's one subset of companies. The left-hand side company is listed in Europe. The right-hand side company is listed in the US. And whereas 10 years ago, you could almost, regardless of the sector, make the case of US equities being valued higher than European equities, right now, with this sample, I mean, we cannot see any such pattern. So there does not seem to be any valuation arbitrage. I think one thing that we have observed, which is quite interesting, is that Nordic equities currently enjoy about 10%, across all the sectors, about 10% premium to other equity markets. So valuation arbitrage does not exist. If it does, we think it might be even beneficial to Europe and Nordic. There's not an awfully, 10 years ago, there was a whole host of companies, as you see in the graph, they're listing EMEA, so broader European area, listing in NASDAQ. A whole lot of companies, that faded away totally, and there currently really isn't a tradition of EMEA companies coming to NASDAQ. And if you really look at, okay, now what are the companies, non-US or EMEA companies listed in NASDAQ, where do they come from? You can see that 75% are Israeli companies and Greek shipping companies. Why am I saying this? Is that not only if you need to convince the US investors that you are the sort of greatest things in sliced bread, not only do you need to sell your own company, not only do you need to sell your investment case, but you also need to sell the country. You may also have to sell Europe, and as I think we are all painfully aware of, selling Europe to US investors at this point in time is not particularly easy. Now, what happens with the long-term investor following? And again, it's very difficult to be prescriptive here because every case is special. But if you just look at the sample of what's happening with the IPOs that have been done in the US or NASDAQ tech IPOs this year, you have the best performers and you have the worst performers. Now, it may be coincidence, but of the worst performers, 5 out of 7 companies are foreign, so non-US issuers. And why that happens is that effectively when there's headwind, when people run to the hills, the first things they sell out are the foreign companies that are several thousand miles away, that are not there to explain what's going on, how their business is doing. And it also may have that may be that their end markets are further away, so the country risk kicks in there as well. So nothing against NASDAQ, it can be done, it's a very good exchange. But you need to be very, very careful to make sure that you actually at the IPO get the following. If you don't, this could well happen. So what are the next steps? In addition to listing location, which I think I've harped on long enough, what are the other things you may want to think or actually should be thinking early on? Not only do you need a business plan, I think that's a bit of a given, but when you have the business plan, you should also, from very early stage on, think about what are my key peers? If I was to IPO my company, what are the key peers and how do I actually benchmark against them on operational metrics? What is my edge? Why would someone buy shares in my company as opposed to X, Y, and Z? It's very good to have them identified early on because they will unavoidably provide the valuation peg. No matter how good company or no matter how fast you grow, the valuation will always be relative. That's a key thing. Capital structure usually is not much of an issue because companies operate with effectively no debt. So the question is just how much of a cash balance do you want to have? And offer structure is actually quite important because very, very often in sort of growth company IPOs, it's difficult to find selling shareholders. It's either primary shares, i.e. the company raises new capital, and then the case may be a bit difficult. But if you want to increase the liquidity, if you want to make sure that there's enough shares to be sold, and I haven't mentioned the sort of size of an IPO, but I think, $75 million and upwards is starting to be a good benchmark. You need to find people who sell the shares. And that's not always easy. You need to figure it out early on and how that works. And as I said, in the case of Transmode, it really is advisable to start seeing these institutional investors early. They will provide you feedback. You actually learn from those meetings. You know what other companies in the space are doing. You understand how they approach valuation, what research they read, and that will greatly help your venture, even if you ultimately didn't end up doing an IPO. The right-hand side on this page, I think that's what most people think about when they think about IPO preparations. That's actually pretty boring stuff, and that can be done in the ordinary course of business. Your lawyers and advisors will take care of that. I would say it's about 6 to 9 month process getting ready, but that's not really what you as entrepreneurs should be focusing on. That there are other people for that. And I think that pretty much brings my little spiel to an end. What are the key takeaways? You need to be careful about the listing location. You only get one shot. Listing choice or listing location does actually affect how you are going to run your company going forward. If it is a non-domestic or sort of foreign listing, that will affect the way you need to think about reporting, maybe even reporting currency, where you have the management, and how you run your underlying business. And second thing is, if you're looking for valuation arbitrage, we think it's tough. It's a tall order. It's difficult to prove that there is such a thing as valuation arbitrage. And last point is that you may start thinking about starting the preparations quite early. So I don't know how we're doing on time, but if there are any questions, happy to answer them now or later. I don't know if there are any microphones around, but... Okay. The question was, okay, I didn't list Hong Kong, how would we value that? I think that's a very, very good question, because the deepest pool of capital right now for new issues by far is in Asia. Now, the issue there is that the Asian investors actually want to buy businesses or invest in businesses that have some sort of Asian angle in their business. And it doesn't take an awful lot. I mean, we have sort of listed consumer goods companies that have 1/3 of their sales in China, brand names that are well known, or where the biggest growth comes from Asia. But unless you actually have a pretty solid foothold in the Asian market, it's difficult. I mean, it will be difficult to explain why they should invest in your company.
Thanks. Thomas Muha.
Hi.
How do you see the split between different types of companies? Are they mainly venture-backed, private equity-backed, or original founders who are selling the company?
Unfortunately, there really haven't been that many IPOs that one could do a statistical sample. But I mean, what is happening clearly is that the IPO market has been dominated by private equity, so more sort of buyout, LBO type exits. There have been very few, and again, I would like to come back to the point. I think, I mean, the stock exchange, at least here in Finland, but also more broadly, they are really starved of high quality, high growth companies that are actually sold by either the VC backers or the sort of founders or some other intermediate finance. The one thing that the market, frankly, has a bit allergic reactions to right now are the LBO exits, as you have seen in the case of, for instance, ISS.
Yeah, hello, my name is Victor. I wonder if you have any concrete tips for how to market your IPO in these smaller countries, so you also reach a wider audience.
If you are, I don't know which country you refer to now, but let's assume if you're from Eastern Europe, etc., where the capital markets are not as developed, I think, I mean, that may be slightly difficult. Because, I mean, the sort of big Russian companies, as I said, the big Russian internet operators, everybody wants to get Russian exposure. They have been big enough, and people have made a bet. I think the country risk might, for the small countries, actually be an obstacle. So, sorry, there's a bit unclear answer, but without looking at the specific circumstances, I think it will be tricky. But I think, I mean, the same sort of mantra still holds, that you might be best off trying to find some investors in your domestic market to build the backbone, and whether that's sort of more than half, less than a half, that would help. If those investors do not exist, if there's no capital in the country, we would need to rethink, I think, something like London listing, and a lot of hard work would be required, but unfortunately that wouldn't be easy.
I think we can take one more question if someone has the best question, a short one. All right, I think you covered everything, Eero.
Right.
Thank you very much,
Thanks, Eero.
everyone.
Thank you for being here.
Thanks.